A beautiful morning to you. Welcome to 55 minutes of current and relevant business conversations. That's what we do normally here in Business Morning. I'm Ini John Meko, and we start from the global space, which is our usual place to start. And oil prices steadied in early trading on Wednesday after falling for 3 consecutive sessions as a U.S. trade deal with Japan signaled progress on tariffs. And a poll shows that U.S. crude stockpiles fell last week, indicating stronger demand. Look at the numbers for this morning. It's in the green. It went up. That's for Brent, 0.22%, landing at $68.76 a barrel. We've seen it hover around 68 cents in the last couple of sessions. After it settled 0.1% lower on Monday. U.S. West Texas Intermediate crude, that's from the United States, at $65.46 a barrel. That gained 0.23% after a 0.2% loss in the previous session. U.S. President Donald Trump and Japan have struck a trade deal that includes a 15% tariff on U.S. imports from Japan. He also says that Japan had agreed on a $550 billion in investment in the United States. So oil has fallen in previous session after the EU said that it was considering countermeasures against the U.S. tariffs as hope fades for a deal ahead of August 1st deadline. That's next week, Friday. Now, in another bullish sign for the market, the U.S. Energy Secretary has said that the U.S. would consider sanctioning Russian oil to end the war in Ukraine. The EU on Friday agreed to its 18th sanctions package against Russia, lowering the price cap for Russian crude. But analysts say a lack of U.S. participation would hinder the effectiveness of that package. Now, here in Nigeria, the President and Chief Executive Officer of Dangote Industries, Mr. Aliko Dangote, has revealed that the group's petroleum refinery imports about 9 to 10 million barrels of crude every month from the United States and other countries. This he made known when he was delivering a keynote address at the ongoing West African Refined Fuel Conference that was in Abuja yesterday. The event is organized by the Nigerian Midstream and Downstream Petroleum Regulatory Authority and S&P Global Commodity Insight. Mr. Dangote says that they've been buying crude oil from international trading companies which buy this commodity from Nigeria at very high premiums. He laments that Africa is increasingly becoming a destination for cheap, often toxic petroleum products, many of which are blended to substandard levels that would not be permitted in Europe or North Africa. He also revealed that due to the continent's limited domestic refining capacity, Africa imports over 120 million tons of refined petroleum products annually at the cost of approximately $90 billion. Now, yesterday, of course, the Monetary Policy Committee made the announcement for the third time. We saw that rates are retained in Nigeria, with the CBN maintaining its tightening stance. The CBN governor says this will be consistent until at least a single-digit inflation can be seen in the horizon. This report is put together by myself.
The committee decided to maintain the current monetary policy stance.
For the third time in 2 years, the CBN's MPC has retained all parameters at the end of its meeting. The CBN governor, Mr. Olayemi Cardoso, shares considerations, which is a mixture of both positive and negative macroeconomic outcomes.
The committee acknowledged the decline in headline inflation in June 2025, the third consecutive month of deceleration. Despite these positive developments, members observed the uptick in month-on-month headline inflation, suggesting the persistence of underlying price pressures.
Mr. Cardoso expresses the determination of the bank to deal with the underlying price pressure until a single-digit inflation is achieved. but raises concerns on the need for collaboration with the fiscal authority in areas which include the management of federal allocation, which he believes has added to inflationary pressures.
We need a framework to ring-fence this fact to ensure that it doesn't filter into the larger, especially to FX, in a way that will be creating challenges for the FX market.
Maybe the disbursement should not be as once. It shouldn't be like a bulk disbursement. You can phase the disbursement. That's also subject to what the governors will say. You can do that. Also, another thing to consider could be that they can actually give them instruments that can be discounted.
Economists also see other possible hurdles to hitting the single-digit inflation target.
My projection is perhaps Q2 2026 before you can be looking at Q1 to Q2 2026 before you can be looking at single digits. Other things being equal, which economics call ceteris paribus, not all things, other things being equal. But at that time, my major fear, which I've mentioned about 2 or 3 times on this show, is political activity will happen.
The CBN, however, remains optimistic, projecting further decline in PMS prices, moderation in price of food and energy, as well as stability in the foreign exchange market. Ini John Mekwa, Channels Television News. So that was the decision yesterday, and of course we had that studio conversation before and after the decision. Now let's get another perspective to it. The Chief Executive Officer at Cowrie Asset Management Limited, Mr. Johnson Chukwu, joins us to share his own perspective. Mr. Chukwu, good morning and welcome to the program.
Good morning, Ini. Thank you for having me.
Good to have you. So I'm sure this is in line with expectations. I mean, the whole stance of the CBN, even though we've seen 3 consecutive decline of inflation.
Yes, absolutely. I don't think anybody would have expected the central bank to move in either direction, either tightening further or losing. Given the fact that if you look at the macroeconomic environment, yes, granted, we've seen a 3 months consistent deceleration in inflation rate, but the inflation is still at 22.22%, which is quite high. The CBN target is to achieve a single digit. So we're very far from a single digit. But beyond that, you also look at economic growth. Economic growth is still relatively tepid. At the 3.13% economic growth, that's just about our population growth rate, or just marginally above our population growth rate. And then you still deal with the pressures on the foreign exchange. Today, we've seen some level of appreciation of the local currency, but expectedly, now that the FARC had been released about 1.8 trillion naira, the highest so far, we should expect pressures on FX, and that will pass through on commodity price, on average prices. Then you have to deal with the issue of food production, which has not improved materially. If you look at agricultural GDP growth rate, it was 0.07%. And that is a pressure point when you talk about Nigeria's inflation, because the pass-through effect of low growth in agriculture is high food prices, high food inflation, which transmits into all item inflation. So I think it was a most expected outcome, most expected decision they took, because we can't afford to tighten further now, given that we still have relatively weak economic growth. Neither can we afford to loosen, because we still have FX pressures and we still have high rate of inflation.
So the CBN there is talking about a single-digit growth, single-digit inflation rate. Does that look anywhere close when you look at, especially, we see the macro, but also look at the micro, and you did talk there about the issue of food production, a major driver. So even when we see it does seem like headline inflation is declining, food inflation is not, and that, of course, tells us where some of those pressures are coming from. And we still see the issue of insecurity in the food-producing areas of the country. So do we see this single-digit inflation anywhere close to us?
We've not had single-digit inflation figure for decades, and it's not likely going to materialize in the near future. In the first place, some of the assumptions the central bank has made, including that they expect further decline in PMS price, it's based on some other assumptions that they may not crystallize. One of which that crude prices will continue to decline. That may not happen. I mean, the announcement, some of the statements you made in your program at the start includes that we are seeing a reversal in the decline we saw in crude prices. because Russia, U.S. is threatening to impose sanctions on Russia if the war does not stop, and as well as there is some level of agreement between U.S. and Japan that could open up trade, reduce the trade barrier that U.S. is imposing. Some of these factors will lead to increase in demand for commodities, particularly crude. And that means if crude price goes up, PMS price will go up. So that assumption is neither here nor there. Then the other aspect you have touched on is the issue of food production. We still deal with very heightened level of insecurity in the food base of the country. Then until that is addressed, which I do not think that problem will be solved overnight, maybe we could see some level of improvement, but it's not going to happen in less than 1 year. So these factors, high food inflation, unstable exchange rate, even if you have had some moderation in the dollar rate, and again, the assumption that PMS prices will drop may not crystallize. So if those things do not crystallize, the expectation of a single-digit inflation figure in the near future is too far, it's too optimistic. I think that kind of expectation will, we should have a timeline of close to 10 years, given Nigeria's macroeconomic environment. Like I said, we've not had a single-digit inflation for more than 10 years, for almost 20 years. The last time we had that was quite long ago, and our macroeconomic variables do not support in the immediate, and I repeat, in the immediate, a single-digit inflation rate.
So I'm glad you brought up that, because I mean, when you talk about oil prices, that's beyond us. We're working in a deregulated environment for our oil and gas. So, you know, that is actually beyond our control. Now, another thing that the CBN governor talked about even before the meeting is the issue of FAC. And I know you mentioned 1.8 trillion is what was shared. That's feeding into inflation. And now, yesterday, we also talked about the issue of the new tax law, which should increase revenue for government. And then we see this also feeding into inflationary pressure. One of our guests yesterday was also featured in that report, Mr. Laje, talked about the issue of political activities coming up. We see the drum beats, they've started. And we know in Nigeria, political activities come with a lot of money being spent. That also is a potential pressure on inflation. So it does seem that we have a lot of negatives coming against us towards this cutting down of inflation.
Yes, absolutely. Like I said, it's very optimistic for anybody to expect that we're going to have single-digit inflation in the next couple of months. I think it's a far-fetched objective that the central bank must set a more realistic timeline. It's not something that will happen immediately. The pressures are going to come from multiple sources. We talked about even the exchange rate. It depends on the fact that we're going to continue to increase crude production, and crude prices are going to remain strong. But if crude price remains strong, so you have a stable exchange rate, well, on the flip side of it, you're going to have a higher cost of petroleum products, which will feed into inflation. We talked about the insecurity, particularly as it relates to food prices. These factors are what is staring us in the face, and they are not likely going to drive they are not likely factor that will drive that inflation figure. The issue of election nearing expenditure. Unfortunately, the political environment has actually become very heightened. Only 2 years into the government, into the current administration. So we have seen decisions that will now be driven. We will now be seeing decisions that will be driven by political exigencies instead of core economic considerations. And those factors will always tend towards injecting liquidity into the economy, as well as creating a feel-good feel among citizens so that they can vote for particular political parties. These factors all feed on inflation. So I don't see, I can't relate with the expectation of a single-digit inflation in the immediate. Of course, it is achievable in the long term, but it will be driven by improved level of productivity in the economy.
Okay, so I guess the most realistic expectation is even when we meet in September, there will be a hold. What are some of the possible impacts of a hold? I know in Nigeria, sometimes when you talk about the MP, says, oh, it's not going to make any difference, so it's going to be a hold decision. And what are some of the possible impacts of a continuous hold decision at where we are, 27.5, and all other parameters are being held steady, and the central bank maintaining its tightened stance?
Oh, the thing about hold is that it just basically tells economic agents that the macroeconomic environment is relatively stable and that the central bank expects that current environment will subsist for some time or there will be further improvement. Bear in mind that central bank has several other tools which they use to influence the economy. Unfortunately, there is some level of disconnect or the level of connection between monetary policy rates and interest rate in the environment is very loose in Nigeria's particular environment. So what the central bank uses to influence economic activities or level of liquidity are other tools like the use of treasury bills auctions, the auctions of OMO instruments, intervention in the foreign exchange market. These are what the central bank have been using, and these are the factors that currently directing imposing the direction of economic agents' decisions. Take, for instance, the issue of managing foreign exchange rates. The central bank has used effectively the OMO and the OMO auctions and treasury bill sales to manage the foreign exchange position, as well as interventions in the market when the need arises. So in terms of economic agents, they are looking at what is the interest rate environment. Interest rate today tends in the region of 30% if you're a borrowing customer. If you're a prime customer, maybe you borrow at 29%, which does not reconcile with the 27%, 27.5% MPR. Bear in mind that there is an asymmetric corridor plus 500 minus 100, which simply means that the standing deposit rate is 26.5%, that is minus 500 basis points, while at the standing lending rate is 32.5%, which is the rate that central bank lends to the banks. Ordinarily, in an environment where you have a strong interplay between the macroeconomic environment or monetary prices and the central bank monetary policy rate, then the minimum lending rate would have been in the region of that 32.5% plus a risk premium. But that's not what we have. Then if you look at even the treasury bills situation, at the last auction of treasury bills, the central bank sold treasury bills 364-day instruments at something like 16.3%. And then what is the connection between that and the monetary policy rate? There's no clear nexus between them. Neither do you have a connection between the 16.3% and inflation rate of 2.2%. So we have a peculiar macro monetary policy environment that the central bank is using other tools that are more effective than even the monetary policy rate.
Okay, all right. We'll see how the central bank will use that, at least before we meet on in September, and see what the results will bring. Thank you so much for your time and your views this morning, Mr. Johnson Chukwu, Chief Executive Officer at Cowrie Asset Management Limited.
Thank you for having me.
Now to other issues. In a move to advance its regional efforts to combat food insecurity and climate change, the ECOWAS Regional Fund for Agriculture and Food is housed within the ECOWAS Bank for Investment and Development, EBID, has commenced the training of financial institutions in West Africa with the theme West African Initiative for Climate Smart Agriculture Training Program for Financial Intermediaries. The organizers believe that building technical assistance for financial intermediaries and capacity building for agri-SMEs is the primary target of the training.
When you want to mitigate climate effect on agriculture, this is when we bring tools on climate smart agriculture, meaning that you will bring what we call climate smart technologies. So it means today you need to generate improved seed that will not stand long before you may plant rice and waiting 3 months to harvest. The techniques now is to have improved seed, for example, for rice, just for 120 days instead of 3 months, 2 months, etc., etc. This has been already on operation. They should be ready to operationalize the fund as quick as possible for the benefits of the farmers. So when we say for the benefits of the farmers, this is to aim at the end of the day for ensuring food security in our countries and globally for the region.
Under the ECOWAS Agricultural Trade Program, well, we've seen two key issues. One is access to finance, but the second one is what practices practitioners adopt across the value chain. So this event gives us the opportunity to simultaneously tackle these problems. I mean, whilst providing access to affordable finance, we're also able to push banks to begin to appraise agricultural projects with the lens of climate responsibility.
Now let's talk about financial inclusion, and we're discussing it from the eyes of MasterCard this morning. MasterCard is looking at the issue at a report that was commissioned by Genesis Analytics that highlights that financial inclusion in Africa is set to grow at 6% every year. And this, of course, would have a huge economic impact on the continent. There's also the issue of cross-border trading, which this is supposed to help deepen. Let's have this conversation with the President Africa at MasterCard, Mark Elliott. Hi, Mark. Good morning. Welcome to the program.
Thank you very much. Good to be here.
Good to have you. So MasterCard, why are you so interested? Anyway, you're a payment company, so so we know why you're interested in payments, and financial inclusion is good for your business. But why are you concentrating on this report by Genesis Analytics?
So what we wanted to do was to really highlight the opportunity that's out there on the continent for digital payments. And, you know, as MasterCard used that exciting quantum of $1.5 trillion to effectively say how we want to also play our role in enabling people and access to the digital economy. And the way that we do that across the continent, but I guess here in Nigeria, let's talk about Nigeria, you know, is through the launch of different types of ways to have payments accepted. So contactless, hugely important here in Nigeria, which reduces cost, simplicity, it's a better consumer experience. We've also worked with partners such as KaiOS to bring low-cost acceptance on feature phones to the country. And then, you know, we're also kind of thinking about how can we turn Galaxy and Samsung devices into points of acceptance with tap on phone. And then, of course, we need to work with some of the key players that can bring this all to life. So been working with the Lagos State Employment Trust Fund, we've been working with Zenith Bank, et cetera, and really, you know, with these different players involved, what we can do is we can enable this opportunity for consumers to be able to transact in different environments and ultimately elevate the economy in doing so.
Yeah, and you know, in recent times, Africa has been discussing intra-trade within the continent. Payments seem to be, over the years, a challenge or a hurdle to that. Is MasterCard actively working to simplify, you know, these payments, cross-border payment solutions?
Yeah, so I mean, just to give some context here, remittance and cross-border payments, as we all know, are kind of the lifeline for Africa's households and indeed for you know, businesses across the continent that trade. And so what's really important is to recognize that is not a great experience always. It can take time for the money to flow, et cetera, and often what you send isn't always what turned up. Now that's a $100 billion opportunity with remittances on the continent, which accounts for about 6% of the continent's GDP. So it's an addressable opportunity which we can solve for. Now MasterCard has got something called MasterCard Move, which effectively allows us to play our role in connecting banks and connecting fintechs and retailers across the continent so that we can redistribute capital and at more cost-effective ways and in a more user-friendly way for customers. So I think that's the role we're playing. We've done a massive launch initially with Access Bank, which really facilitates payments across 150 countries. And lights up their organization to enable payments to be redistributed across the continent in one action, I guess, one integration. So we're very proud of these types of achievements, and we believe that by doing this, we can also enable for the diaspora, which can be sizable from African countries into the rest of the world, to also send money back to home and enrich foreign currency reserves. And do that at a more affordable rate. So we're playing that role, I guess, intra-region, but also to work with the diaspora.
So you talked about the fintech ecosystem, and we see a lot of conversations coming from there and around there. It's growing in Nigeria. and Africa generally. MasterCard, what parts are you playing? Because sometimes we ask the question, is there a competitive relationship between traditional banks and fintech companies and all of that? Where is MasterCard amidst all of that?
So MasterCard likes to see themselves as one of the original fintechs, but let's face it, there's been a fast-growing population, but interestingly, probably if you look at Africa's fintech center, it's the fastest-growing sector globally. Sorry, it's the fastest-growing in Africa globally. But only half of those fintechs probably actually came together on the continent in the last 6 years. So we can see the vintage, if you like, of the fintechs are relatively short. Now, what that means is that MasterCard understands that not all fintechs want to spend all their time trying to understand payments. So what we can do is we can help them with the payment side, not necessarily always ourselves, but in collaboration with other players. And we believe that giving them speed to market in a way that allows them to focus on what they really want to focus on is a way that we can support that. We do that through a bunch of different frameworks. We've got something called a Product Express, which is a fast track launch of cards in case that's what the fintech wants to achieve. We also have programs like Start Path program, which allows fintechs to come into the MasterCard Start Path program, maybe they're kind of Series C onwards. And once they've done that, then they can expose themselves to the entire MasterCard network and fill up their order book with consumers who might be interested in different countries to participate in buying their products or services directly. So, you know, we play our role. The way we've done that co-creation is with a couple of the big banks here, like FBN, Zenith Bank, and Access Bank, and we work closely with them to also enable their role that they want to play with fintechs themselves. Because let's face it, the banks have got a lot of utility and capability which the fintechs also need to leverage. So I would say we want to play a really big role. We're also conscious that as fintech grows and evolves, it's going to move into different spaces. So at the moment, what's very topical are things like stablecoin, open banking. And so we also want to make sure that we're at the forefront and working with these fast evolving fintechs as they emerge.
So sounds interesting and sounds like you're really active in that space. But let's talk about accelerating digital transformation generally in Nigeria, in Africa. What role are you playing there?
Look, I think you don't have to be somebody working in payments to walk around inner cities and appreciate that in Africa we lack payments infrastructure to a large degree in a lot of places. And I think that's the reason why, and we're very supportive of why mobile money has played its role. And so I think, you know, when we look at that and we look at the opportunity, if we were to look at within the study and you were to look at maybe 100 transactions across Africa, probably 90 of those transactions of that 100 are still in cash. So let's face it, the opportunity is massive. It's that, you know, that opportunity which I think excites us all within the payments industry. And so MasterCard's approach is to work with fintechs, to work with SMEs, and to try and enable better experiences and reduce the friction. You need a little bit of friction sometimes to instill trust. But you know, we try and remove that friction so that we can create better experiences, and do that in collaboration with the telcos, with the banks, with the fintechs. Most recently, you may have seen that we've signed with MTN Group FinTech, and that's to enable millions of unbanked individuals to access digital financial services through mobile money platforms. So we're also evolving the way we work and finding different partners. We also have a focus on sectors like farmers. We've now got 5 million farmers on our Community Pass program, which enables them to sell their crops without necessarily having to go through lots of middlemen. So, you know, we're finding different ways of also trying to solve for problems in the financial inclusion ecosystem.
Yeah, I mean, I'm so much interested in the one you just talked about, the one with farmers. How does it work, and can other sectors also jump on that, you know, and have this ease in their transactions?
Look, I think the way it works is, so as a farmer, let's say I've got my crops and I want to sell them without going through a middleman, then I sign up into MasterCard's digitally interoperable platform, which allows me to access buyers. And through that platform, the agri providers, if you like, can also help me through my harvesting period to sell me fertilizers and other things to help me with my crop produce. But also in that data lake, the banks also have access to that data lake. And so what that means is that the banks, once they see the data, once they understand the farmer's behavior, their transaction behavior, they can lend against that at a more responsible rate. So what that does is, and I think the vision is obviously to take sustainable farming into commercial farming, and ultimately that will then create ripple effects into the broader economy. So we're sitting at the center of that with the MasterCard Community Pass program. And as we see more farmers sign into the program, that also allows the banks to play their role. If you look at lending across the continent, probably only 3% of lending is met from a regulator's perspective. So the way in which we can instill programs which capture data so that banks can lend in more freely is obviously starting to deal against a huge that 97%. And imagine if we were able to do responsible credit lending across that wider population, the broader effect that would have into the country.
I think that sounds so interesting, and it seems like it kills a lot of birds with just one stone. So on the one hand, you're bringing the markets close to the farm, and then on the other hand, you're also having the financial institutions monitoring the activities of the farmers. So, I mean, credit and funding can be done, following all of that. But is this only available to those with MasterCard, or how do people get engaged in this? A lot of people might be interested in it.
Yeah, so we work through banking partners across the continent. So I can tell you within Nigeria, this is actually a discussion we've also had with government. We recognize that at the highest offices that agri is obviously a high priority, as 70% of the continent's workforce is in agri, and this is hugely important to people's well-being. So, yeah, we're very engaged. We're obviously working with the players that have direct relationships with the farmers. We don't have direct relationships. We're more of an enabler, if you like, of their success.
So are there plans to bring other sectors on board, or is it just for the farmers, for agriculture?
So no, for the time being, we're very, very focused on scaling. 5 million farmers on the program so far. We want to scale that. We have a culture of making sure we double down and do things well before we probably move to other sectors. But I do recognize that there are other sectors, emerging sectors, which are very relevant to payments, such as healthcare, for example, where we'll turn our attention. But at the moment, very focused on our success with agriculture.
All right, we'll be looking forward to maybe the announcement when you delve into other areas, especially health. But seeing that you're so deeply involved in digital economy, Africa's digital economy, what would you like to say to shareholders when it comes to potentials and areas that could be explored, which you think have not been explored yet?
Sure. So I believe that Africa is shaping digital commerce, and I believe that Africa is the most exciting and fast-growing continent when it comes to payments globally. So we're in the spotlight. In terms of what that means, I think it means that fundamentally there's an opportunity for businesses to elevate themselves and to become more successful by not only focusing on their near, the market, which is immediately in their area, but also then to create an online presence and to think about how they can be part of a more digitized supply chain. So what I would say is that there's a massive opportunity out there. That's what we're painting in the study. $1.5 trillion, we believe that Africa is setting the course in the fastest growing continent. And I believe that businesses can leverage some of this technology that MasterCard brings, along with other types of capabilities, which I'm sure you cover in this program, and really build much more successful, world-beating businesses that could be relevant across many borders and hopefully globally.
All right, Mark, thank you so much for that and sharing those potential. Mark Elliott is the President Africa at MasterCard. Thank you so much for your time. All right, let's take a break. When we come back, a constitution amendment conversation has been going on. There are labor issues coming up there and workers' welfare. We'll touch a bit on that after the break here on Business Morning. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. Now, the ongoing conversation around a constitution amendment. We see the Nigeria Labour Congress expressing concerns about a reported plan by lawmakers to transfer labor issues from the exclusive to the concurrent list, saying it would undermine the national minimum wage and jeopardize the well-being of average Nigerian workers. Well, these and a whole lot more is what we'll be talking about, of course, not just in the public sector, but also in the private sector. And we have right here in the studio the Managing Director of DeLog Nigeria Limited, Mr. Oludele Ogundimu. Mr. Ogundimu, good morning and welcome to the program.
Happy to have me.
Great. So have you been following this conversation and the concerns of the Labour Congress? What do you think about it?
Apparently, the wisdom of our elders that divide the Constitution into three parts as for the job that's to be done by federal, state, and local governments. The Constitution says the federal government shall legislate on everything that has to do with the exclusive list, while they also have power to legislate both on concurrent list with the state government, while the local government legislate on residual list. So if we are moving issue that has already been on exclusive list, especially issue that has to do with the wage fixing, and moving it from exclusive list to concurrent list, there's going to be a kind of hitch. What I mean by hitch is the fact that we're already used to federal government legislating exclusively for the salary and wages of the workers, which is holistically beneficial to the workers. And every time, the workers always look forward to the time when the new minimum wage will come up. Okay, we started from minimum wage of 18,000, we moved to 30,000. Now, we are now on 70,000. Okay, if you now decide just to move this thing to concurrent list, we have to find out the motive. What is the motive behind such move? We all know the vulnerabilities of some of our states in Nigeria. How many states are really viable to sustain workers? If you look at Nigerian business hubs, the states that are viable in terms of businesses, we could talk of Lagos State, Rivers State, Kano State, maybe Federal Capital, and maybe talk about South-South, Cross River and all that in the area of oil and gas.
But moving it to the concurrent list, wouldn't that make it more realistic? Because even as we speak at 70,000, how many states are really paying it?
Exactly.
But if we move it to concurrent, then states can actually decide what they can afford to pay.
And that is going to be a kind of problem for the workers. Because the workers' welfare is already disseminated, as in reduced to virtually to nothing. So now, the workers always look to federal government as protecting their interest in the area of wage fixing. So if you now move to this, this issue to concurrent list, which means some states, you know the attitude of government when it has to do with workers, especially welfare. How many states can actually take care of workers?
What about the private sector? Let's come to the private sector.
Good, which DeLog Nigeria belong to. We have been working for multinationals for the past 30 years. And what I have noticed about these multinationals is that they are statutory compliance In other words, once there is any new law or any policy that is released by government or Federal Ministry of Labor, they don't want to waste time because they have an interest to protect in the country. So we don't have issue when it comes to private sector. The last minimum wage of 70,000, I think within a space of 3 weeks, all our clients, they comply instantly. And you will never, so that's why.
Is it just the multinationals that comply? Are the Nigerian companies not complying?
And when I mean, we have multinationals in Nigeria today, we have mixed. We have Nigerians, we have foreigners.
Okay.
Okay, so they are still regarded as multinationals or blue chips.
All right.
They comply seriously.
And what about other issues of employers' welfare, health insurance, and all of that?
I think Nigeria has really moved forward. Look at before, we don't have anything that has to do with pension. In 2004, there was a kind of regulation which we have pension reforms, which allows even casuals that we regard as casual, they are tracked under vendors like us, Deloitte Nigeria Limited. We are vendors. So they want you to do everything that has to do with pension, health. We now have National Health Insurance Authority, which regulates the health of the workers. At least for every worker must be under a single plan, at least. And some of these companies have been generous to extend it even to their family, that they can insure workers and their family of 4. And this has been going on perfectly. The sector which I belong to, Deloitte Nigeria, we even go beyond that because the workers are the main tools of our business. If you don't treat them very well, if you don't create welfare policy or welfare program that's going to sustain them, before you know it, you start having crisis. And you don't want to have crisis. Where we manage workers, you hardly see crisis. As much as we are able to explain to the clients, this is the policy, this is the government rules, and you have to comply. And they have been complying.
And these multinationals are doing well at this time. I think you're more into the consumer goods sector.
Yes, they are doing well, but nevertheless, look at the exchange rate as actually affects their production plan.
But we have a bit of stability at least.
Yeah, it's fear. But I will tell you that their product going to the market is not easy. Most of the time, it's not every time they make profit. They have to do a lot of turnover before they are able to gain something in return. But nevertheless, it's not like they are complaining, but it is not out of place if government will also focus on people that are helping the economy. To me, I believe these manufacturing companies, they are the largest employers of labor of Nigerian youth. And government should deliberately and intentionally do something and focus on them, give them incentives that will make them...
What kind of incentives are you thinking of?
The kind of incentives I'm thinking of is, look at the time of when Obama took over, when Obama came to power. They have a kind of economic recession. And there was a bailout of $700 billion, which they were able to distribute evenly to some of the good companies. So the government can also, from their, at least they have Ministry of Commerce, they have Ministry of Trade, they can deliberately say, let us give attention to multinationals helping. They have incentives like, look at the bank loans today. We are talking of 37% interest rate. So if you, so the interest element alone is 37 million in a year. And banks in Nigeria are not relaxed. They want the money immediately. They want it in a year. So if you have a compounded interest, that is a compounded problem.
So, but wouldn't it be better? I mean, the government has been preaching the ease of doing business. Don't you think it would be better for a general, for instance, we have a new tax regime that's supposed to also clear and reduce some of the burden, and, you know, things like that perhaps could be a more sustainable plan and policy to help.
Okay, we really want to thank the current president because our president is economically sound in terms of knowledge. So for all these new releases they are giving now, I think when it starts breaking out, we will see the impact on the people and on the companies. That is good, but that should not, they can still go ahead and do more, especially in the area of interest elements. Okay. That is serious.
Because we just had the MPC meeting yesterday, and we saw, you know, the West officially still 27.5, but I mean, as you have said.
No, it's 37. Before it used to be 2018, but jumped to, immediately we have a kind of reversal in the exchange rate. Everything jumps to ×3.
Okay, but at least we have a stable naira now. Hopefully, the value will be better in the coming days.
If we reduce our consumption for dollars.
People like you will reduce your consumption and reduce your demand for raw materials.
Most of the companies are already improvising some of the things they need to source
okay,
for.
with domestic raw materials.
Exactly, and it's getting better small.
Okay, all right. Thank you so much for your time, Mr. Oludele Ogundimu, Managing Director of DeLog Nigeria Limited, for your time.
Thank you so much. And thank
all
you
right,
for having me.
Okay, so just hold on. We are heading to the global space now. Will Ibong has some stories from...
Hey,
Will.
Oh yeah, I was just waiting for that, listening to that conversation about, the thirst and the urge for dollars. I know there was one of the comments, I think, when I was watching one of the series that Mr. Taiwo Oyedele was having, and he was talking about one of the reasons why we still have this persistent inflation is about Nigerians, the thirst and the desire for dollars. Yeah. You just find Nigerians stashing up dollars. What do they need it for? They have no need for it, but it's one of the issues.
Yeah, it's the confidence in the naira that's the issue. But, the CBN governor said he has observed, that there's a growing confidence in the naira. So with that, then we don't need the dollar, to preserve the value. Hopefully that will be a norm soon.
That's to set in very soon, and President Donald Trump will not have something to hold over us. Let's see, U.S. President Donald Trump has announced a major trade deal with Japan, setting 15% on Japanese exports to the U.S., including cars. Japan will invest $550 billion in the U.S. and open its markets to more American goods. Now, Trump says the U.S. will get 90% of the profits. Prime Minister Ishiba confirmed auto tariffs will drop from 25% to 15%. Japan's auto exports, a key part of its economy, have recently declined. The deal also includes a future energy agreement. Now, Japanese markets soared in the news, with auto stocks like Toyota and Mazda jumping up to 17%. The deal may also help Ishiba survive rising political pressure at home. Similarly, shares of Europe's top car makers rose on Wednesday after the U.S. and Japan's blockbuster trade agreements raised hopes of a tariff breakthrough for other major exporters. Now let's head to Washington, where U.S. Treasury Secretary Scott Bessent is heading to Stockholm next week to extend the August 12 tariff freeze with China. And this comes after 3 rounds of talks in Geneva, London, and now Sweden. And both sides are now talking beyond tariffs, including China's excess manufacturing and its purchases of Russian and Iranian oil. Our Washington correspondent Maria Bird joins us. Good morning, Maria. It's good to have you on the show. Maria, what's the likelihood right now that the Stockholm meeting, they've had several rounds now, actually will result in a formal extension of this trade or tariff truce that we're seeing?
Well, we know that the president has been very clear about this 90-day extension back in May when he first set that in place. But we also understand the importance of the U.S.-China trade relationship. We understand that the tariffs have had an impact not only on China, but they've had a traumatic impact on small businesses in the U.S. And so it is really going to be key and critical for this meeting to happen. I don't believe the Treasury Secretary is going to kind of shy away from that unless there are some things that come in play politically that could impact that. But most likely this meeting will happen. We foresee this meeting being something that hopefully will allow for not only an extension, but some very viable trade agreements that will obviously benefit not only the U.S., but China and the global market, because we know the U.S.-China trade relations does have an impact on the global market as well.
Definitely. That's what we saw Sweden's government talking about. That's why it's key. They want to host this. But how far is China, the U.S., willing to push China on curbing its industrial overproduction, especially given Bessent's comments? He wants them to become a consumer country.
You know, there's going to be push there. The president has said from day one when he came into office and even during the campaign trail that he was bringing manufacturing back to the United States. When you think about the Midwest region of the U.S. and where manufacturing was a huge part of the industry there and a huge part of the job market, and seeing the decline in manufacturing in the U.S. and his commitment to manufacturing, it's clear that he's going to be pushing a bit there. The question is, how hard is he going to be able to push? What is China necessarily necessarily going to look to as a potential solution. I think that is really where we're looking to see what are the possible solutions. We know that China has built an infrastructure that is allowing for this great capacity and production. We know that they've been able to address some of the cost factors that oftentimes limit people in the U.S. and other parts of the world from being able to consume certain products. And so how are they going to be able to come to some sort of agreement so that the U.S. Feels comfortable and being able to use the goods, obviously purchasing goods at a fair rate from China, but also being able to increase the amount of manufacturing that occurs here in the U.S. shores. And so that, I think, is going to be something we'll be watching for through that meeting in Stockholm. I don't think we've had any clear indicators as to what the potential solutions could be.
Okay, do you even see U.S. and China reaching this agreement? Let's just talk about, you mentioned the agreement was reached mid-May, the 90-day truce ends August the 12th, and they are talking about an extension. How is Washington, especially the fact that they're now framing China's role in buying sanctioned oil, does it risk complicating the trade progress we're seeing already?
Well, we know that the oil piece is huge in the process of trade across the globe. We know that there is a direct correlation between trade agreements, tariffs, overproduction, oil. I mean, this is all within some of the geopolitical landscape that exists. And so the challenge is becomes a geopolitical issue. We know that the U.S. has been very clear about their stance and sanctions as it relates to Russia and the war with Ukraine, as it relates to the Middle East, and some of the challenges there, especially as you look at the U.S.'s position with the war with Israel and Gaza. And so, in Gaza with Israel and Hamas. And so we know that that is going to be a clear conversation. And we do believe that conversation, as it might somehow create some sort of tension, but I do believe that the U.S. is looking to strategies to be able to address it holistically, because we know that that does create another potential challenge as it relates to coming to an agreement for trade. And so understanding, because they are the largest consumer of oil, importer of oil, China that is, and so they're pulling from Middle East and Russia during these times does cause some caution, not only for the U.S. but other countries as well that have thought about sanctions against those regions. So this is going to be, I think, a quite complex, but a very strategic. But of course, the number one focus is going to be trade agreements, because coming to an agreement around trade obviously is going to have an impact on the global market in the U.S. And Americans are really looking for the U.S. to come to an agreement that is both beneficial for China and the U.S. as well.
Yeah, we're all looking for that agreement. We did see this just concluded deal between U.S. and Japan, and it's really a win-win for both of them, because we see Japan also saying, mission accomplished. So they're satisfied with 15% on auto tariffs. That, we have that 25% on, on other countries. So it's a good one for there. We're looking forward to this deal. But looking at the tone here, reading Scott Bessent's comments and analyzing the tone, is it realistic here, or is it just another constructive rhetoric that, and diplomatic posturing ahead of the August 12th meeting?
When you think about the relationship with the U.S. and Japan, specifically as we look at cars, cars are a huge part of the U.S. Marketplace, and we know that Japan was a huge trade partner as it relates to our vehicles. And so that is going to definitely be a real agreement that is going to be necessary. You can see as we look at China, as we talk about the Philippines, and as we look to what has been a long-standing process with China and the real need for the U.S. and China to have trade agreements. We know the president has been very clear on America first, and he's continued to practice that throughout. But of course, his administration is being very clear that as we look at America first, understanding the global market so that we can continue to show some signs of positive progress in the marketplace and also the economy.
Thank you so much, Maria Bird, our correspondent in Washington. Thanks so much for giving us those details. We look forward to more conversations. So China and the EU are set to meet Thursday in Beijing in so many meetings, and Taiwanese delegations also in Washington trying to broker a deal. So much going on ahead of the deadline, but also We're wondering, it's just the global, I mean, the West right now, or countries in Asia and others. We don't see Africa in the mix here.
Yeah, well, we have our own circle. We have our own circle. This is not our circle, so let them deal with it.
Their circle.
Yeah, and then we form our own circle. Thank you so much, Will. All right, and just before we go, we'll tell you that the Nigeria stock market yesterday hit another record high. It's a record high almost daily week. So we're now at 132,451.73. The market gained 0.47%, almost 0.5%. That means that 395.35 billion naira was added to the market, and the market cap is now at 83.78 trillion naira. At 1 p.m., myself and Will be back for Business Incorporated, and Will give you intraday numbers. We'll see how much has been made then or lost, I would say. John Mekwa, I'll talk to you later. Enjoy the rest of your day.